Alright guys, I've been asked a fair few questions about GameStop, silver and what's going on with Reddit and retail traders really being able to drive markets at the moment. So what I'm going to do, we won't spend loads of time talking about GameStop because I think that's been done. We'll go and look at what the knock-ons are of this, and particularly looking at silver and where I think your opportunities and your dangers are as a day trader. What GameStop has managed to do, and I think we shouldn't underestimate or downplay how good a trade idea this was. And it was very well orchestrated, played, the trade worked. And what this has set in people's minds is that these types of successes can come very regularly. And this is where the psychological thing comes in. That when you have availability of something rather impressive, something that doesn't happen that often, is very easy to recall, and most people can tell the story of GameStop and how it worked. What this does is it sets into motion, rather than the thinking through the entire process of how GameStop worked, instead everyone goes, well, anything that's got some short position, we can go against it. And so it creates this sort of semi-illusion that this is a very easy thing to do. And I think there's a distinction between silver and GameStop in the thinking behind the whole trade, and also where some of the dangers lie in that. So very quick, we'll ping it over. Here's your GameStop chart, and GameStop gets ramped up, we know that. And I think there's two elements here that are very important. One, that psychological kind of setting the precedent that these kind of things can happen and people can make this happen with a degree of sort of unity among individual players. But also the other significant bit is this drop. Now this significant drop here, yes, I know there is an element of Robin Hood restricting people's ability to trade, and that's also a danger there in who you're actually trading with, but also because a lot of this run-up was done on short-term traders. Remember that most of the people getting into this are short-term. And therefore, short-term traders don't hold and hold and hold. I know people were looking to do this and they try to hold and hold and hold. But no, this was one day. We gap up, one day up, next day up, and then it starts to turn. And people run for the exits. And not everyone is trading through Robin Hood, so it's not entirely the Robin Hood thing. But what it does, it creates this cascade of selling because everyone's looking one way. And I think this is a really important thing to remember, that the success of GameStop has brought in this idea that it can be done, and it can be done very regularly in multiple markets. But also, it should be a little bit of a warning that when everyone's looking in one direction at the same thing, there's danger out there, particularly when the moves are forced by shorter term traders. And this is what I think we have with silver. And just to give you a few kind of bits of info on the fundamental side, this was from Bloomberg that I was reading a story on yesterday. There's a distinct difference between silver and GameStop, and two key parts of that are, one, the size traded in silver, so the size of that market. How easy is it to drive the market? Silver, on average, has around about $11 billion worth of trade every day. GameStop, by comparison, 50 million. So 200 times smaller, 0.5% the size of silver. So that's the first thing. So the ability of a group of people to drive silver is going to be much, much smaller because the size of that market in comparison to GameStop. The other significant thing here, and I think this is where the success of GameStop is then feeding into other markets and thinking this can be done again, is the fact that there's not a great deal of short positioning in silver as far as I can read. And from the Bloomberg article I was reading yesterday, we actually have a larger long position as a percentage of open interest than we've had for some time. 3-year average is 9.3% long. Current is 25%. So in fact, there's quite possibly more longs than there are shorts out there. So the merit of the trade from a fundamental point of view may not stack up. Now, I'm sure there are many counter arguments to this, and there always are. So what you've got to do then, from a day trader's point of view, is detach yourself from this and say to yourself, okay, right, well, I see that. How am I going to trade it? What am I going to do about this? And it's not about, wanting to know every detail of the trade. It's about then looking at a market and saying, okay, well, where can I take this trade on? I put a tweet out at the beginning of the week about silver, in fact at the end of last week about silver, about the whole idea of if we can escape this zone, can we move higher and take out the highs of the year? And we've done it. And this is what you've got to do as a day trader. You're looking at this thinking, whether you believe the silver short squeeze trade or not, whether you think this is absolute BS or whether you think it's one of the best ideas you've ever seen, shouldn't matter. As a day trader, what you've got to say to yourself is, right, if we're going to go and break this high, am I willing to go with this? Because whatever my opinion of it is, and personally I don't think it's on the same merit as GameStop, I think it's on a slightly shaky ground. But if we're breaking the year's highs, and bearing in mind we've not traded this high since 2013, as a trader you still got to go with that. It still makes sense to go with that trade. The fact that it fails to stay up there then also brings in another element, and this again is as a day trader where your flexibility and your willingness to change your opinion, change your mind on a trade really pays out. Because what happened up here then, we start to turn, we fail to stay above and we start rolling back, and this is the really important thing with silver. Or it's not just silver, it's any stock that exhibits this kind of pattern. Remember, like I said, the run up that we've seen here, the last few days in silver, is all based on short-term traders. A lot of short-term traders have come in, everyone's jumped on this bandwagon, buying SLV or silver or the silver miners, whoever it is. But SLV in particular is what's going to be pushing silver, and the people buying silver futures as well. So we've got up to highs, and this is where you've also got to be thinking, and I always say this to people, think about positioning. Think about what would you be doing if you were long from here. So you bought it down here. What are you doing when you get up here? What are you doing when it starts coming back? Because this is the bit where people start getting turned over, and as a day trader, this is where I think some of the opportunity lies. Basically, on the idea that when everyone's looking one way, the danger is the other. Because no one's noticing that other side of it. Everyone's seeing the same thing. Everyone thinks the same outcome. And so what this creates is this self-fulfilling prophecy of all believing the same thing. Confirmation bias comes in. You talk to someone else about the trade and they say, yes, it's a good idea. You talk to someone else and they say, yes, it's a good idea. Well, once everyone thinks the same thing's a good idea, if they're all in it, as it starts to turn, there's then going to be a run for the exits as people start realising that this trade's not worked how they thought it might, and they need to take their profit whilst they've still got it. So in effect, you're actually, and you can see it now on the chart there today, you're kind of getting a squeeze of the squeeze. The people playing for the squeeze up are now getting themselves in trouble and falling over each other to get out of the trade. This is where I think some of your opportunity lies. So we now need to actually then make this into a trade. You can't just look at this and go, okay, great, it's falling, sell it. You got to think, right, how am I going to take this on as a trade? And this all comes down to your sort of technical understanding, your understanding of how the move's got to where it has, and why people are going to give up on this. So you bring this down a few time frames, so we'll get onto an hourly now. This is what we had. This was the gap up on Sunday. So the ramp, ramp up on Thursday, drive up on Friday, gap up Sunday night, continuation. So in a very short space of time, we've moved a fair bit. We've moved, $5.50 over the course of around about 2.5 days. Decent movement. So now you've got a load of people sitting on some pretty decent profit. You look at the size of this move compared to anything that we've seen recently, and you've at least doubled the entirety of this range. So if you bought it down here, it would have taken you 10 plus days to get half of what you might have made in a day and a half here. So there's a lot of people now sitting on unrealized profit, and because they're new to the trade as well. I don't mean this in terms of them being retail traders, I mean this in terms of their positions have been executed up here. So now effectively they're trapped if this starts to fall over, and there's only so many prices you can still take a profit on as the market starts to roll back. And this is where you then get liquidation. This is what I mean about people all looking in one direction. As the market starts to turn, this is where the panic sets in, and you'll get these little spurts of flushes down. So there's actually as much opportunity playing this to the downside against the idea of the squeeze up in silver as there is playing it towards the upside. So we'll take it down a little time frame again. So what we'd had Sunday night spike up, and this is where I've drawn the levels from. You've got the 2020 high up at the top. You've then got the spike, which is the high of the Sunday night first ramp up. And then you've got the highs that we achieved a few weeks ago at the beginning of the year. So that's the three levels that we're seeing here. And what you got to think about is, where are people sort of trapped in this? So take it onto a 15-minute. This was the Sunday move up, and this is where the first liquidation comes from. This is the kind of bit as a day trader you're thinking, right, I'm going to make a decision here. Either we're going to break these highs, the move keeps going, and whether you buy into the merits of the silver squeeze or not, there's a directional move. Equally though, there's a lot of other people buying in this zone and buying into the merits of the silver squeeze. When this doesn't work, they're then looking for the exits, and this is where this fast drop comes from. I talked about this yesterday, if anyone saw the live stream on my debrief, and gave an example of it, and we've seen more and more of this as the day's gone on. Same trade comes up again today. Find some lows. This was the Sunday night open low around about 28.34, and again 28.30, the drop of that recent liquidation. We try it again in the overnight tonight. Again, think about, if you were in a trade, where would your stop be? Let's imagine you're long from down here. Where's your stop going to be on this? Well, quite possibly below these lows at 30. And this then creates another liquidation type move. This, I think, is the really important thing with this whole GameStop, silver, and this theme of effectively trying to sort of go against the man, it seems. And you look at a lot of things on YouTube, on social media, on Reddit, and it's all about you going against the man, and we're going to sock it to the hedge funds. And whether that's got merit, whether you subscribe to that idea or not, I think what's more important is to think about, well, how are you going to execute a trade on this? Because it's not just as simple as buy stuff to squeeze the hedge funds. And there's just as much opportunity in playing some of these shorter term trades towards the downside. So I bring this onto an even shorter time frame, and this is where, as a day trader, you're sort of taking your opportunities. It's not about trying to be in for everything. It's about being in for the trades that you can be confident on, and you can milk those trades. So what I'm talking about is, this was the one from last night that I showed. Break this little area of support, liquidation, washout. Decent amount of volume, smashes it down. Same kind of thing then. So here's those 30s again, 34 down towards 30 area. This is the next one. This was the one from this morning at around 7 o'clock. Exactly the same type of trade. I'll give you an example of this. I'll show you on a ladder from this morning as well. So this is where we are, and the premise of this trade, and this is where you sort of plan your trade out as a short-term trader. You're looking at this thinking, right, I think that these lows are going to break if we get there because we've got this positioning above. Lots of people hoping that this market is still going to go higher. They're going to give up on a move below 34. So you've then got these lows just here where the highlight is. I'll make it a bit bigger. These couple of lows just here at 39. That's where you want your entry. You can get in there, you're giving yourself 5 ticks to get to the 34, and then another 5 to break through the 29, 28 zone. And this is how, as a day trader, you want to be thinking about it. These people buying here and not getting anything for their money, they're going to have to give up. So the more dramatic fast move is likely to be down. So I'll get this started for you and you'll be able to see what I'm talking about. So remember, 39 is the place to be looking for. So here's silver, we're trading around about 50, so you're trading just up here at the moment. We're looking at 39, so there's no need to get into a trade here. We're looking down here, 39s, with the expectation that we're going to get down there and we're going to snap through it. That's the trade you're playing. If anyone has looked into trading silver on the back of all of this, you'll know that silver's a pretty high value contract. One contract is $50 per full price, so 39 to 38 is $50. So it's a pretty high value contract. You see it getting a little bit heavy now. And we trade 39, nice quick flick into 39. That's where you're looking to try and execute your trade. Market drops, super fast drop. And then we get this flush down really fast. That's exactly what I mean by liquidation. People have been putting their stops below the 30s, instant drop. And that gives you that fast liquidation. It gives you an opportunity to try and sell again as well as we bounce back and start to hold around about the 24, 25 zone. And that comes from just reading the ladder. You can see where the volume gets put in here. So that's your chance then to add on. And if you're in this trade, what you're looking for then is another shot down towards lows, down towards the sort of 01 area, to try and get yourself out of this trade. And that's what, as a day trader, you're thinking. I'm not sort of thinking long term about all of this. I'm thinking, where are the opportunities I've got right now to take this trade on? And these little liquidations, and we got another one again a little bit later on in the day at around midday, are all coming as people get themselves long, and they're all going to have reasonably obvious stops, because a lot of them are short term. This isn't to be critical of the short term traders, but many people are coming into this market having never traded before, and they're using simplistic methods to set their stops, to place their entries, to execute trades. And this is where there's some advantage to be had as a day trader. So I'm not suggesting that the whole Reddit theme is over, but where I think there's a danger is that, as I highlighted, one thing going very well is easily remembered, and this is what people hold on to. Give an example of, everyone's got a friend who's gone to a casino and won a load of money, and it's gone really well, and they took 50 quid to the casino and they've come home with $1,000, something like that, and everyone remembers that. But that's not an advert to say that the casino pays out all the time. And I think that's where people need to remember that there is still some danger in this, and it's the very well thought out trades that work. And I think where people have to remember, and I saw something on YouTube that did make me chuckle about this, is that one coup does not necessarily make a revolution. I'll leave you there. Just remember that. One coup doesn't make a revolution. It was a great idea. Doesn't mean that it plays out in everything.
If you find this video interesting, if you want to go deep into the Axia training method and how our trading team of 7-figure traders develop setups and strategies, and how they learn to build the most profitable trades across all market environments, then join me in this workshop. Now in this workshop, you're going to learn 3 powerful steps we use to train all our traders on both our London and our Poland trading desks to help build incredible levels of consistency. How to predictably understand which setups work and which don't. You're going to learn our 2 main strategies for how we perfect our trade timing before we enter every single trade. You're going to learn the VEL concept, which is our one and only technique we use to leverage our largest trades. You'll also learn how to avoid trading setups that don't work, how to avoid those large losses, and our main method we use to identify them that saves our traders significant amounts of capital. Finally, you will learn how our traders use the power of network learning to find market patterns quicker than ever before, so you shortcut that learning curve. In the workshop, we want to program your awareness of elite performance, to program your ability to choose the right setups, and program your ability to be a consistent trader. So the trades that you execute become more simple and clearer. And I can tell you this, you'll never see the markets the same again. You'll never look at the markets with a narrow view of getting lost in all the noise and confusion. You'll take your first step towards a deep edge market awareness. I cannot wait for you to join me in this workshop. And I think you're in for a massive paradigm shift in your understanding of how to develop as a trader. So join me by clicking on the top right-hand corner of the screen and sign up for this powerful training workshop, or visit elitetraderworkshop.com.